Hello and welcome to FX Street Currency in Play. I am Matt Brown. I'm joined today by Ryan Littlestone, who is an independent trader and analyst in the FX space. How are you today, Ryan?
I'm very good. Good morning to you.
Good morning. Market's a little bit quiet. I mean, if we go on to the headlines, if there are any, well, the top trends, markets feel really kind of range bound at the moment. We've seen a bit of dollar strength, but really where we've seen that before as well, it's kind of dissipated quite quickly.
Yeah.
So let's go through the trend, starting off euro dollar, gravitating around the 118, saying consolidation likely or potential. What do you think of this currency pair at the moment?
Yeah, it's pretty spot on there. You know, we're in the summer trading, it's not too busy. We're still getting little pips of volatility now and again. But when you get trading like this, when you get conditions like this, you do need a lot of patience to trade it, but it is still tradable. Take euro dollar. I had a little short yesterday up at 117.95, 90, because I thought, you know, that's quite a big level in the consolidation range there. Funny enough, I got stopped out at 20. The high I think was 28, and now we're trading 117.65. So I got it right, and I just got the trade wrong. But you can still trade; it's still well tradable. You know, you pick your levels. 118.30 was the next resistance level. I didn't want to push it that far on my stop. If I had done, then I would have been sitting in a nice profit this morning. But you've got to pick these levels, and anywhere up in the 118s and down to 117. 116.90, that's been pretty much the range for the last couple of weeks. And if you've got the patience just to wait for these levels to come, dip in with small trades, don't have to be big, you can pick up a few pips along the way. And while the rest of it is trading in the middle, just sit back and let it do its thing. And
you mentioned trading size. So when the market's trading sideways,
yeah,
is it a case of maybe reducing your size just to, you know, still have your levels, have your stops, obviously, and take profits, but maybe reduce the size? Because I mean, it means you're still active in the market. There's still potential to obviously have some winning trades, but at the moment, with no real direction, it's hard to call where it's going to go.
Right. But there's no need to chase a trade. You know, when conditions are like they are now, you find it does nothing, sits in a 20-pip range for hours. All it takes is one comment or one headline or one data point, and because there's that lack of liquidity, you find that you could get a violent move that will blast through these levels, and then reverse straight away. We saw it last week. One of the US data points, we were trading around that 117 level. Headlines came out, I can't remember which was, I think it might have been CPI or one of them. We broke through that level, that 116.90, all the way down to 116.66 or something. And you think, right, there's a break on, you know, it's a big move, and 10 minutes later it's back up, it's back in the range, and, you know, if you'd have gone with that break, you would have lost money on it. So you need to reduce your trade size. There's no need to go chasing and throwing money after bad, good money after bad, because you just want to wait for these levels that you can get in at, not too big, because if you do get a violent move against you like that, then you're not going to lose too much money, and you just play the levels and, you know, let the liquidity take care of itself.
Wise advice there.
I hope.
Good stuff. And next trend, we're looking at cable, rejected above 129. Again, as we mentioned at the top of the show, a bit of a dollar rebound. Cable, I think 130 feels a long way off at this point, doesn't it?
Yeah, and you think we're up at 132s last month or a few weeks ago. It's cable. At the moment, it's a decent rally seller, because you know there's always going to be a Brexit headline around the corner. You know, the BOE trade is still there, but every time you get a semi-hawkish remark, it's followed up with, you know, a disappointing data point. We've had good data points last week, and we still can't maintain a bid in it. So, you know, if you get a decent rally, then look at the levels again, look at the recent highs, trade against those levels, keep them quite tight stop-wise, and, you know, the way it's been playing at the moment, then you should get some reward for that.
And we've got Jackson Hole at the end of the week, or starting on Thursday. It's worth noting Mark Carney, Governor of the Bank of England, isn't even travelling over to Jackson Hole. He's sending Broadbent, who is maybe, I wouldn't say a shoo-in, but expected maybe to become the next Bank of England chairman, I think in 2019. So it's important to look at that. If you are trading the pound, don't expect kind of any news flow really to affect that. So it feels kind of, certainly in the pound at the moment, against the dollar maybe is a bit of a nothing trade. We had Eddie Topic on yesterday just saying it's a leave alone currency pair potentially. at the moment. And then looking at dollar yen regaining the 109 level, potentially a weaker yen story maybe, as well as dollar strength. But again, we've mentioned on the show before, it seems anchored around this 110 level, and there it will stay until we see any big moves.
Yeah, well, much like the pound, we're seeing a lot of lower highs coming in there now. So it's still a seller's market at the moment. Any gains we've got to gain up to 109, sort of 40.50 yesterday Friday on the political news out of the US with Bannon getting the chop. And, again, that didn't last. And yesterday we saw it all the way down through 109 once again. So again, we're ranging. But it's not a definitive range. Mm-hmm. It's a very tight range at the moment, and that's what you've got to be careful for, because tight ranges tend not to last. So again, you need to look at your wider charts, look at the wider time frames, pick your high levels, like you say, up against 110 and against the recent lows down at the 108 60s, 70s, 80s, and just pick those levels. And if those levels break, then you either go with a break or you just sit back and you look for your other levels. I like dollar yen down to 108.50, preferably down towards 108.20, 108.00. That's where I'd look to take a long in the pair.
Are there any other pairs on your radar at the moment? And when you have these range-bound moves, as traders sometimes start looking further down the currency tables and picking weird and wonderful minor FX pairs, is there anything that's jumping out at you at the moment, or are you staying with the majors?
Yeah, I tend to stay with the majors like this because if you're going to have lack of liquidity in these major pairs, it's going to be even less in the smaller pairs. And I don't like to spread myself too thin when I'm looking, because you spend 2 hours looking at 15 different currencies, and in the 2 hours you don't trade it, you go back to the start and you look at them all over again. So I like to stick with the core pairs, just plot my levels, keep them in the back of my head or scribble on a bit of paper, and just sit back, wait for those levels to come. Patience is needed when you're trading, any time of the year, especially during the summer. You need that extra bit of patience. So there's nothing wrong with finding your levels, going and doing a bit of gardening, coming back an hour later. There's only so many times you can stare at a chart moving 10 pips a time. Yep. But you mentioned Jackson Hole. A lot of it's been the expectation's been written out of the market, because we've heard Draghi saying there's not going to talk policy, Yellen's not going to talk policy or step over the line. But what that does is it switches the risk, because instead of the market expecting something and we get volatile moves ahead of that, or we get some expectation moves ahead of that, that's been switched off. So if we do get any comments from Jackson Hole, no matter how minor, the market's going to take that as a surprise, and then you're going to get a volatile move. So you can't write it off entirely, but you have to know where the risks have switched to.
Understood. Finally, the calendar, and really nothing to talk about here. Housing price index out of the US at 2 o'clock, not really market moving. Looking ahead to tomorrow, we've had to look ahead to tomorrow because there isn't anything really to get the markets going. ECB Draghi speaking. Again, I doubt there'll be anything in that. If he's not going to say anything at Jackson Hole, I doubt in a speech tomorrow he'll mention anything.
Yeah, I've looked at the speech and what it's about, and it doesn't seem like it's subject matter where Draghi's going to, suddenly start talking about monetary policy. These things he tends to stick to the script and what the event entails. The housing price index, I don't know, it could have a little surprise there because, it's going to add to the inflation picture. Although I don't believe US house prices directly impact into inflation, but the market's looking for any sign of any sort of price rises. So that's something to keep an eye on. The prices in the US aren't hitting any sort of bubble territory at the moment. So if it does rise, then people are going to put 2 and 2 together, and I may come up with 5, but that's enough to move the market sometimes. And if it comes in lower, then again people are going to see yet another soft price index from the US. So it may not, you may not get 100 pips out of it, but it's worth keeping half an eye on.
Good stuff. Well, on that note, Ryan, thank you very much for joining us today.